Welcome back to the GreenLight Investor for the week ending August 14, 2015. The goal of the GreenLight Investor is to provide a resource to make managing your 401k both a simple and easy process. We do this by using red, green, and yellow cells to help you decide when to buy, what to buy, and when to sell. This presentation is for educational purposes only and should not be taken as personal investment advice. The examples shown are just that. They're examples of how you can use this worksheet to help make investment choices within your 401k. Please refer to your own investment policy to make sure that the choices you make are appropriate for both your time horizon as well as your understanding and acceptance for taking risk in financial markets. With that said, let's go ahead and go right into our worksheet. Worksheet's updated each week, and it's presented in a manner that you can look at the different choices available to you in your 401k and make simple and easy choices. You'll know when you need to make adjustments to your plan, and you'll know most of the time when nothing or no action is actually needed. The worksheet is set up into different categories. On the left side, we have the investment choices available to you, and they're arranged by the fund number, the symbol, the fund name, and the description of the fund. At the top of the list are the core investments available to you. These are the index funds, both the bond and the stock indexes. Then we proceed down and we'll go into the satellite investments. Start out with the money market fund. You'll move into the fixed income, the growth and income, the U.S. equity funds, international funds, and then finally the sector funds. Generally, they're more aggressive as you're towards the bottom of the list, and as you're at the top part of the list, they tend to be just a bit more conservative. Middle part of the worksheet, we have the performance numbers for the year. We'll start out by showing the closing price for each of the funds. We'll show the month to date, the quarter to date, and the year to date returns. Looking at the year to date returns are important so you can see that the fund choices that you're currently in are competitive with the ones that are available to you within each of the different categories. It's important to not get too far behind or to stick with a lagging fund for too long. Finally, we'll get to what I think is the most important part of this worksheet, and that's the current weekly trends. This is centered around column U, V, and W. Column U has the long-term trend, which I think is one of the most important columns in this worksheet. It'll tell you whether the fund is long-term bearish, bullish, or neutral. Generally, we're trying to stay in the bullish and the neutral funds. Once you get bearish funds, it's generally time to move to either a money market or find another fund that is acting well. The center column, V, shows you the week-over-week trend scores, and the bright green will show you the funds that have been the strongest on a relative strength basis, and the red notes will highlight the funds that have been the weakest on the week-over-week basis. Also, each week, you'll see are highlighted each week, we'll show each fund, and we'll show whether the relative strength of that fund is positive, negative, or neutral. When you see a green light in this column right next to V, that means that it's generally strong and has been performing as you would expect or as you would like in a positive to neutral direction. When you see red in this column, you'll see that these are the weaker funds, and we generally try to stay away from these, especially if they're showing 2 or 3 weeks in a row of red activity. What's really important, and I'll discuss this a little bit further this week, are the numerical values inside of each cell. Those will show the actual relative strength ranking for each of the funds each week, and then you can see the trend on a week-over-week basis. For instance, on July 31st, the fund here, the Vanguard Total Stock Market Index, had a relative strength rating of 1.3. On the 7th of August, it had a 0.63, so it got weaker. And this week, we're also seeing that the fund is weakening. So you're seeing a general weakness in this fund. Even though it's still positive, it is showing that it is weakening. And we'll go down the list and see that most of the funds are weakening. And this is a good way to see that the general market conditions are not that favorable for making money in stocks right now. Let's go down here and see another way to use this list. The relative strength, again, what I think is the most important part, is showing as we go down here to the fixed income, we're seeing that this is generally red, which means it's a good time to stay away from this, as well as the long-term trends for each of the fund is showing a bearish or negative sign. So again, there's no reason to be in these funds right now. Next, we're seeing the U.S. growth in income, and again, you're seeing a lot of red and generally a neutral condition. So if you're in this, you would expect to see very poor performance right now, and you'd expect the neutral to a neutral outlook for these funds right now. Once you start seeing these tiles turn green, that means that the general trend is starting to turn around in a positive direction, and that's generally when you want to be in these funds. As we go down, we see that the strongest performing funds are now in the U.S. equity funds. You're seeing a mix of green and red, so there are some funds that you could be in, but there's also some funds that you generally want to stay away from. This week of note, we're starting to see a lot of green lights starting to turn up in the short-term column, so that's an early warning signal that you may be seeing a turnaround in this market, or at least stabilization in it. Finally, let's go to the international funds, where we've seen 3 weeks in a row now with solid red. So again, that's a good reason to be out. We're seeing the week over week trends showing very bright red lights. So again, a good reason to be out. The short, the intermediate, and a good portion of the long-term trends are also bearish or negative right now. So that's again a good reason to be out of these funds. And finally, the sector funds have been doing pretty well in the with this category. We're seeing generally green lights, and there's a number of green lights in the long-term column V or column U, which means it's okay to be in these funds. I mentioned we'd look at these numbers again, and when we go into the asset allocation, we'll see that we have a good portion of the capital in money market, and let me show you how you can use this simple system to decide when you want to go back into funds. Say we're looking to find funds that we want to go in. What we'll want to look for are funds that we're not currently in that are showing a green light in the column U and a green light in column W. But what's most importantly are the numbers. In most of these columns, you'll see that the numbers have been getting weaker or lessening each week, which means that the funds are still in a relatively weak state. What you'll want to see before entering capital from the money market back into one of the funds to fill out your targeted asset allocation is preferably 2 weeks where these numbers are increasing or showing relative strength. When you see that, that generally is a better time to get into funds because that will show that there's some strength or capital starting to flow back into these funds. So that's what is the best sign to look for. So even though we're seeing a lot of green, we're still seeing the majority of these, the numerical values, getting smaller or showing that each of the funds is still showing weakness. So we'll be wanting to look for those to turn around and show preferably 2 weeks of increasing values, and then we'll reallocate back into the funds. All right, let's go ahead and see how easy it is to see if there's any action that is needed within your 401k. To do this, we'll click on View. We'll go over to the Custom Views in the ribbon and click on the My Current Allocation view. Click on Show and we'll populate the allocations. In these columns on the left, especially column H where it says My Selections, we'll see that we want to be 100% invested, and our current allocations shows 100% invested. In the white cells is where you'll input your target allocation to each of the funds. And if you don't know how to do your allocations, there's an asset allocation questionnaire that you can click on. And if you click on that, it'll guide you through some general rules for selecting your asset allocations. But let's go ahead and see what we have right now and see how we can determine whether or not we need to make changes this week. Right now we have a 10% allocation to this index fund. And to see how we're doing, let's simply slide over. And as long as we're showing a green light and a green light, we're okay to stay in here. Even though we are seeing a number of weeks where this has gotten weaker, we won't make any changes in it until we see a red light appear. All right, let's go ahead and find our next allocation. Right now we are fairly heavily invested in the money market, and again, that's because of all the red lights we've seen in a number of the categories. We've decided to play safe and just stay on the sidelines until we see better conditions for making money in markets. Our target allocation for fixed income shows 0%, and we're currently at 0%. And the reason, again, is we have a solid red wall of cells to the right of column V, and we have a solid wall of red cells to the left. It's a very bearish sign, which means it's very difficult to make much money in this category. Our next category, we're showing that we have a 5% target allocation, but we're 0% allocated, and again the reason is because of the amount of red lights to the right and the neutral flags on the left side. So with that said, we've moved capital again to the money market until we start to see green appear and the numerical values getting larger on the right side of column V. Here we have the next allocation, which we would like to have 30% allocated to U.S. equities. Because of the mixture of red and green cells, we've moved 10% over to the money market, and so right now we only have a 20% allocation. We'd like to fill that back up to 30 at some point, and again, what we'll wait for is when we start to see some of these numerical values increase on a week-over-week basis, we'll be allocating to those funds first because those will be showing the first funds that are strengthening in the new market. We currently have a 20% allocation. It is bullish long term, and we're still showing that we're having a positive valuation in the relative strength trend score. So that said, there's nothing to do with that allocation. Our next column, our next allocation, we have a 30% target in the international funds. Currently, we're showing that we have 0. Same reason as we have 3 weeks in a row where we have solid red walls showing up, and we're seeing a mixture of yellow and increasing red, and a lot of red in the short and intermediate terms. So with all that red showing, there's lots of flags saying there'll be better times to be in the markets. Right now is certainly not one of them. So we're staying on the sidelines and just playing safe because you never know how far a market will turn. Again, the signal that we'll see is we'll want to see green lights appearing in the long-term trend in column U, and we'll want to see increasing numerical values and preferably green lights starting to appear in column W. Once we see that, we'll start filling in our allocation again and try to get back up to the 30%, but we like to look for favorable market conditions for making money in the markets. And finally, our sector allocation, we have a 15% allocation. And again, that's derived from the asset allocation questionnaire at the top of the page. And we currently have a 15% allocation, so we're fully invested in this section. Our 10% allocation shows that we have bullish signs to the left and a bullish sign to the right. So we're okay, there's no action needed. And we have a 5% allocation showing a similar situation. We're bullish to the left of column V and bullish to the right. So with that said, there's no action again that's needed. Typically you'll see about 3 or 4 times a year where there's action that's actually needed. System's not meant to be a timing system. It's just meant to show when there's significant changes in the market and either help you decide to move money to the sidelines or to move to different funds that are showing green lights with increasing relative strength values in column W. So that said, it's an easy way, a very simple way to keep track of your allocations and see if any action is needed on a week-over-week basis. Let's go back to our homepage view. We simply click on the custom views. Let's go with the performance columns. We'll go back and click the show button. Take us back to our homepage. And with that said, that's what I've got for this week. I hope it's been helpful and gives you some ideas and some resources for managing your 401k choices. If you'd like to find out more about how the GreenLight Investor can help you make sense of your 401k investment allocations, simply visit our website at greenlightinvestor.org. You can just click on this link. You can go to my email. You can email me, and I'd be happy to put you on my mailing list and send out a copy of this spreadsheet to your inbox each weekend. And that way you can do a quick review of your 401k and see if there's any allocations that you may want to change based on the GreenLight system. I hope this has been helpful. I want to thank you again for taking time out of your weekend to go through this. I hope that the 5 minutes you spend doing this has been helpful. And please feel free to reach out to me if there's any questions or things I can do to help you out. Thank you again, and enjoy your weekend.